Hello everyone. This is the pre-market report video for today, 15th July 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, let's quickly review what happened on Friday in the Indian market as well as US market, and then we can discuss other topics. Here the top left chart shows Nifty's price movement on Friday, and the top right belongs to the Nifty IT sector. The bottom left belongs to Bank Nifty and the bottom right belongs to Reliance Industries. As you can see, throughout Friday, Nifty IT continuously supported the market, increasing throughout the day. In a single day, the IT sector increased by almost 1,700 points. It's a significant rise due to two reasons. One, positively inclined TCS results, and two, low US consumer inflation data, both of which we already discussed in detail in the last pre-market video. However, at the same time, if we remove the IT stocks, Nifty was volatile and continued to consolidate, which was clearly evident in both Bank Nifty and Reliance Industries. Between 10:50 and 11:15, in just 15 minutes, Nifty increased by over 200 points, roughly 1%. The same thing happened with ICICI Bank, HDFC Bank, and Reliance Industries, etc. Basically, all other non-IT Nifty 50 stocks. This is the exact story which related to the injection in the stock market that was highlighted by SEBI a month ago, which at present I'm reading for my Saturday video, seems to have happened on Nifty. See, Nifty is made up of 50 different stocks. If the stock influenced Nifty's price action, then it's fundamentals, which is good. But if Nifty influenced the stock price, then it's from the influence of derivatives or pure speculation. Here I'm not complaining, but it looks odd and worth highlighting. Regarding institutional activity, after one day of selling, FII became net buyers again. On Friday, the net bought shares worth 4,020 crore rupees, whereas DIA were net sellers. They net sold near 1,650 crore rupees. If we analyze the participants' options open interest volume data, retail traders are more inclined towards a breakout on either side. I mean, in both call option and put option open interest, there are more buyers than sellers. Whereas if you look at FII, they sold more call option than they bought, and on the put side, they bought more than they sold. So from the FII's perspective, they are inclined to believe the market may not go up from the present level, but might have a breakout on the downside. This was evident in FII's long-short ratio. Regular viewers know this. At the end of last Wednesday, FIIs had the long-short ratio of 1.39. By Thursday, it dropped to 1.22, and on Friday, it further dropped to 1.19. So clearly, FIIs are cutting their long positions. In direct contrast to that, proprietary traders bought more call options and sold more put options, which means they are thinking exactly the opposite of what FIIs are thinking. Here, please note, I'm not saying FIIs are correct or DAs are wrong. All I'm saying is what their positions are. Who is correct and who is wrong, only time will tell. So those were the quick takeaways from Friday's Indian market. Then coming to US market, top US banks JP Morgan and Wells Fargo released their Q2 earnings results. Just to clarify, whatever earnings are released by US companies this month will be Q2. Whatever earnings are released by Indian companies in India will be Q1, since both countries use different fiscal year start and end months. Back to the topic, both banks posted mixed results. Both banks were down significantly. Despite that, on Friday, because of the stronger expectation of interest rate cut, US market rallied. In the end, Dow Jones increased by 0.62%, S&P 500 was up by 0.55%, and Nasdaq was also up by 0.62%. In the case of VIX, it dropped by 1% and moved below 12.5. This was Friday's status. After that, there was an incident in Trump's campaign. I have no idea how the market is going to react to that incident. However, this increased the probability of Trump winning the 2024 US election to over 70% from the previous around 50%. So from now onwards, we can expect the market to adjust for Trump's next presidency, including all those trade wars, etc. Regarding oil, it was marginally down. On Saturday morning, WTI crude closed near $81 per barrel, whereas whereas Brent crude was around 75.5 US dollars per barrel. In terms of Indian ADR, they were more in line with the Indian market. Both the IT stocks further rallied, whereas HDFC Bank and ICICI Bank closed mixed. Here, IT stocks positivity was further boosted by HCL results, which we'll discuss in a moment. About Gift Nifty on Saturday morning, it closed at 24,603, equating it to our spot market. It indicates a 40 to 60 points gap up opening. So that's all about the Friday global market. Now let's move to the India specific info. First, about HCL, on year-on-year basis, revenue increased by 6.7% and profit increased by 20%. The profit definitely beats analyst expectation. However, revenue and EBIT margin came in line or marginally below the analyst expectation. Additionally, on Friday, due to the expectation of good quarterly results, HCL shares increased by 3.3%. So now it's uncertain how much more the results will influence the stock on the positive side. Second, on Friday evening, global agency Fitch downgraded Tata Steel from stable to negative. So today, Tata Steel will be on focus. As a summary, US market closed positive, but we don't know how the global market will react to the Saturday incident. However, for now, based on Gift Nifty, it indicates a 40 to 50 points gap up opening. Let's see. Moving on, based on stock open interest, there is a short build up on Asian Paints, GMR Infra, Divi's Lab, MRF, and Vodafone Idea. On the contrary, there is a long build-up in India Mart, Manappuram, Dr. Reddy's Lab, and Emphasis. About the things to look out, HDFC AMC, HDFC Life Insurance, Geo Financials, Hudson Agro, and SpiceJet are some of the major Indian companies whose earnings results are scheduled released today. In terms of macroeconomic data, today, before the Indian market hours, various very important Chinese economic data such as Chinese GDP, industrial growth, retail sales growth, and unemployment rate are all scheduled release. These can influence the oil price. Then during the market hours at 2 p.m., European industrial growth data will be released. Finally, in the aftermarket hours, Fed chairman will be interviewed at some Washington Economic Club. These are some of the important items we need to keep an eye out today. Coming to technical, on Friday, Nifty opened 70 points gap up and climbed near 24,600 intraday for the first time with above average volume. It finally ended at a new closing high above 24,500. Thus, on the daily chart, Nifty formed a medium green candlestick pattern with a minor upper and lower shadow, which is again a neutral candle. However, Nifty defended the rising support trend line and the 10-day exponential moving average and sustained higher high formation for the 8th consecutive week. Hence, technically, Nifty is showing some strong momentum and approaching the psychological 25,000 mark, but some momentum indicators are signaling overbought conditions. So 24,600 seems to be a key level for further upside towards 24,800 and then 25,000, while 24,300 is expected to be the immediate support and 24,000 to be the crucial support for further downside if any. In case of Bank Nifty, it underperformed Nifty and closed flat at around 52,280 after a volatile day. Thus, on the daily chart, Bank Nifty formed a doji candlestick pattern for another session, indicating indecisiveness among buyers and sellers about the future market trend. Here, in direct contrast to Nifty, Bank Nifty is below the 10-day exponential moving average but continue to defend the 52,000 zone. Hence, the sentiment might continue to favor the buyers as Bank Nifty appears to have found support at 21 exponential moving average. On the higher end, resistance is at 52,800. Above 52,800, Bank Nifty might continue its upward journey towards 54,000. Regarding the weekly options data, the maximum call option open interest was at 25,000 strike, followed by 25,500 and 24,500, with maximum new call option writing at 25,500 strike and then 24,900 and 25,000. On the put side, the maximum open interest was at 24,000 strike, followed by 24,400 and 24,300, with maximum new put option writing at 24,400 strike and then 24,500 and 24,000. Thus, from options data, 24,900 to 25,000 is the area to watch on the higher side, with support at 24,400 to 24,300 zone. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.